Today we are discussing about banking theory and practice. In that first topic we are discussing about banking and the definition and introduction of the bank. What is a bank? It is a financial institution that accepts deposits and lend funds to the individuals and business. It plays a crucial role in the financial system by mobilizing savings and facilitating economic growth. Banks are intermediaries between depositors and borrowers. So a bank is nothing but financial institution which accepts deposits and also lends money to each and every individual and businesses. So why it is very important? It is very important because to smooth functioning of the economy, and there is a definition given by H.L. Hart which means a banker is one who in the ordinary course of business honors checks drawn upon by him by persons from and for whom he receive money on current accounts. So they gave the definition regarding banker. A banker is nothing but who will take the money and honors checks and giving different type of financial instruments to the individuals and businesses in a particular society, and he will receive money on current accounts also. The next one is about commercial banks. Here what are the commercial banks and what is the meaning of commercial banks? Commercial banks are institutions that perform all banking functions such as accepting deposits, lending money and providing various financial services. So commercial banks are very profit motive, so they will accept the deposits for a profit motive, and they want to take more and more interest regarding the accounts, current accounts or savings account or fixed deposits. They would like to take more and more profit, which are they are very commercialized right now. So what are the main primary functions here? Means accepting deposits, granting loans and advances, credit creation. So first thing they want to do is accepting deposits like savings, current and fixed deposits, and also next one they want to grant loans for regarding loans, cash credit, overdrafts, discounting bills of exchange. Like that they will granting loans to the customers. And credit creation, they are giving through they will give money through credit card or different types of negotiable instruments. They will provide money to the customers. Secondary functions, what means they will give agency functions like collecting the checks, payment of bills, purchase and sale of securities. Other related functions will become under secondary functions. Next one, credit creation. What is the meaning of credit creation? Means here the credit creation means we can create the credit through commercial banks. Why? Because every person will not have money in the pocket, so that's why what they want to do is they would ask for credit. So when the credit is when they ask for credit, everyone is not ready to give the money, so bank is the only source where they will get the credit amount. So how the credit will be given? What is the process for that? So process is giving bank receive deposits, keep as a part CRR, which means cash reserve ratio. Next, lending the remaining amount. So how much amount they want, they will lend that amount. And the next, the loan money is redeposited in the another bank. The process continues, create multiple credit. So when we are taking a credit in the bank, so he will not give full amount. When we ask for 4 lakhs, so the bank is not ready to give 4 lakhs. They will keep some amount in their account, and remaining 3 lakh 50 or 3 lakh 20 they will deposited in our account when we ask for the credit. Why? Because it is a minimum deposit which we will provide in the bank, in the account. So why the credit creation is very important in the organization? Means to increase the supply of money, and we have to promote our business and investment, and we have to encourage our business development, economic development. So for that say credit creation is very important in our society. Without credit, every business or every individual can't survive. Why? Because they need money to survive. So there are different types of banks. So first one is central bank, which we treated as RBI in our India. So Reserve Bank of India controls and regulates the entire banking system in our country. And the next one is commercial banks, which is very commercialized, which the main motto is profit, and they accept deposits and provide loans to the every individual and customers. Next one is cooperative societies, which is very important in the regional or rural areas, where because they want to promote their thrift and credit among the members. So this is very important in a regional banks, means to cooperate themselves and to get credit among the members. And development banks, like providing loans to the businesses, long term capital for industries. Best examples they given here, IDBI and IFCI. Next, investment banks. Investment banks are dealing raising capital of businesses. Next, foreign banks. Foreign banks are very important in the other countries. It will be sustained, but the branches will be sustained in the India. They have headquarters in different areas of the world, and their branches will be sustained in our India. And the next one, RRBs, which will called as regional rural banks, where it is mainly for agricultural development. So in our India, agriculture giving is where we have agriculture is the backbone of our country. So to promote agriculture, to sustain the farmers, the agriculture finance is very important. So the RRB is providing finance to the agriculture, poultry, fisheries. They are giving finance to sustain themselves and to get more. By that they can survive for the next year also. Next, there is a difference between central bank versus commercial bank. What is central bank means? Central bank is the main authority in our country, whereas commercial bank it will runs under central bank. So some differences, variation are there here. So first we were going about the ownership. So central bank is the government owned, commercial bank is private or public, where on both sides it will be there. And what is the main function of the central bank? So monetary control will be there, whereas the commercial bank is just they want to accept the deposits and lending. So who is the profit motive here means central bank is not that much profit motive, but it gives ownership. It want ownership, and it would control each and every bank in the organization. Next, commercial bank is as we previously said, it is more profit motive. Customers. So who is the customers for central bank means government and the banks, whereas commercial bank has general public. Like example, when we want money, what we will do, we will go for the commercial bank and we will go get the money. We will not directly approach to the RBI. So this is a small example here. Customers. So in the example of customers. Next, credit control, where the credit control will be happen means in central bank it will controls the credit, whereas commercial bank it has the general public. So we can control the credit also. So currency issue, where it will arise means in the sole authority, everything, every monetary transaction will be under the sole authority, whereas commercial bank no power to issue the currency. Means when we have currency issues, the issue will be raised by the RBI, not by the commercial bank. So if we want to control, or we have to give new note, or if we want to give new currency also, the central bank will the ultimate authority to take the decision, not the commercial bank. So this is about the topic, and thank you. This is about the Unit 1, and next class we will discuss about the Unit 2. Thank you.